Hello, good morning, ladies and gentlemen, and happy new month to you. Kindly confirm you can see my screen by typing hi in the comment section so that we can get the session started. So if you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section so that we can get this started. Okay, so what do we have here in the comment section? So let's get the session. I'm trying to load up my chats. Okay, here we are. Good morning, 799. Good morning to you. Good morning, Scott Benji. Thank you. Okay, Soma, good morning. All right. Okay. Oh, thank you very much, Innocent Babe. Thank you. All right. Okay, I can see Carrie here. Good morning to you. All right. Thank you, Scott Benji, as well. Happy New Month to every single one of you. Okay. So I'm so excited to welcome you to another promising session on the Extra and Speed Live. My name is Sheriff Aramola, and in the next 1 hour, I shall be your host, where I will be taking you through on a trading journey where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. Well, today is the first day of the month. Welcome to November. Sorry, welcome to December rather. And definitely, we are going to be seeing some activities in the market, which is going to be reflecting that today is the first trading day of the month. And then remember, we're still looking forward to the NFP coming up tomorrow. And yesterday, the market gave us a little surprise as price moved in the opposite direction yesterday, but it's all okay. We are going to be reviewing all what happened during the course of yesterday following the speech from Powell, that is the Fed's chairman speech, which came up later yesterday evening, and we're going to be looking at how that affected the market and what should we be planning against the New York session today. With that being said, let's dive into the chart and see what is going on in the market right now. Well, I can see Hi Max. Good morning, Hi Max. Maja Jami, good morning to you. Scott Benji, happy, yeah. Hi, Max. Merry Christmas in advance to you too as well. So, with that being said, let's dive into the charts and let's see what is going on in the market right now. Well, first of all, I want us to go through the economic calendar. Let's see what is going to be happening today. And with the look of things here, today, Thursday, being the first day of the month, we can see that we have the Bank of Japan's governors going to be having a speech in, let's see, an hour from now. I think 2 hours 30 minutes from now. So we are going to be looking forward to that, and this is going to be affecting the USDJPY, which is one of the pairs we have been monitoring since the beginning of the week. Then in 5 hours from now, we have the publication on the highest manufacturing PMI also, and this is also an high impact event. So we want to be seeing how this is going to be affecting the market. Obviously, participants in this market will be anticipating this event, and this anticipation shall be reflected on the chart as price action. So let's dive into the chart. Let's see what is going on, and let's use our technical parameters to identify trading opportunities lining up for us today. Well, the first option we are going to be looking at here is the US oil, and what do we have here on the 1 hour time frame? So if we look at the current structure here, we can see that we are still in a profitable position here on the US oil as price moves significantly well, breaking out of the $79.50 level during the course of the early session yesterday. So we were around this point yesterday when I told you that we shall be looking forward to a possible trend continuation to the upside if we cite a breakout of the $80.40 level, which is exactly what happened here during the New York session yesterday. And one thing that is peculiar about this current structure is that price has been caught within a consolidation phase right around the $80.40 level and the $81 area. So for the sake of clarity, let's quickly identify the resistant level of this channel here. So we have the 81. I will be using the $81 area, which is a strong psychological level at this point, and we shall be using this to look out for hold on a second, let me try and all right, so we have the resistant level at the $81 mark. So what this simply tells us is that in the last 24 hours here, price has been consolidating within the $81 area and the $80.40 area, giving us an indecision that has gripped the market right now. However, if we look critically well at this current structure here, we will notice that there is a tendency that sellers are trying as much as possible to take over this market. As we can see, since the New York session yesterday, we have been witnessing selling pressure around this area, which is characterized by sharp rejection of that level. As you can see, all the week here in the last 24 hours has been displaying that tendency that sellers might be coming in at this point. And from a technical standpoint, whenever we have an impulsive move like this, we should be expecting at one point in time there is going to be a retracement, which is going to be a reflection of profit-taking activities before another possible wave of bullish momentum will happen at this point. So with the look of things here, and with those who are taking advantage of this opportunity since the beginning of the week, I will be advising us to move our stop loss accordingly. Around the $80 area should be most appropriate to lock in our profit here, and let's see if price is going to be tending towards the downside or we are going to be having a trend continuation to the upside. Now, as we head into the New York session today, what are the things that we are going to be looking forward to? What is going to be our plan? How are we going to be taking advantage of any trading opportunities on the US oil? Remember, move your stop loss accordingly, lock in some profit at this point, and let's dive into the daily time frame, and let's use whatever structure we identify here, compare with the structure we have on the 1 hour time frame to decipher if the bullish momentum is still very valid at this point. So right now we are back at the daily time frame, and obviously we observed at the beginning of the week that price has been caught within a consolidation phase right around the $93.50 level and the $77 area. I think the $78 area since the beginning of the month of September here. So now with the consolidation phase around this area, coupled with the breakdown of that very important key level at the $85 area, I am of the opinion that we are having two possible scenarios, which I was able to explain to you on Monday when we started the week, and that is when we have a breakout of a structure to the downside like this, we should be expecting at one point in time that price is likely going to come back to do a retest of structure, followed by selling pressure on our lower time frame to incite another wave of bearish momentum, which is what our expectation is actually at the beginning of the month. And the other scenario is if price gets caught within a consolidation phase here in the form of a trend continuation pattern, leading to the breakdown retest of structure to send price crashing further to the downside. But with the look of things here since the beginning of this week, we have been witnessing bullish momentum. And one thing we also noticed here is that the level we are right now, the zone we are right now, shares a confluence with an area which has already been has a tendency, a memory for buying power. So we saw what happened here in the month of October. The same thing happened here in the month of September. And right now, at least in the last couple of weeks now, we have been witnessing buying pressure again around this area. So we took advantage of the bullish momentum at the beginning of the week, as we took advantage of this engulfing candle. We saw this one on Monday. This one on Tuesday. We saw this one on Wednesday, and this is Thursday right now. We have a candle running at this point. So will price continue to the upside in such a way that it comes back into the $85 level before another wave of bearish momentum happens, or probably break out that structure to send another wave of bullish momentum? Well, these are the things we are going to be looking at on the 1 hour time frame to decipher if we're really going to be holding on to our bullish momentum, or we should be thinking of getting ready to join the decline to the downside. Then another thing I want to share with you here from a fundamental perspective is that the OPEC Plus will be having a meeting, I think, the first week of the month of December. That will be their end of the year meeting, and there are speculations that this might incite a very huge bullish momentum on the US oil, considering how price has been dropping in the last couple of months. So let's see what is happening on the 1 hour time frame, and let's use the structure we were able to identify on that time frame to decipher what our next line of action is going to be like. So right here on the 1 hour time frame, we are back on the 1 hour time frame, and remember, we took advantage of this opportunity right above the $78.50 level after price broke out of this bearish trend line that has been holding selling pressure in the last 2 weeks here. So we saw the breakout of that structure around this area, coupled with buying pressure around that area. So we took advantage of this move here. We also took advantage of the breakout retest of the $79.50 level, and price since then has been trading above the structure. So now, going into the New York session today, we have two scenarios that we shall be looking forward to. First of all, considering the fact that we have been witnessing selling pressure around this area, I am of the opinion that we might be having a little retracement back into structure before another wave of bullish momentum happens. So it might likely come into this bullish trend line, after which buying pressure should be sending price going to the upside. And if you look at this bullish trend line here, you can see it also shares a confluence with the $79.50 level here. So I will be looking forward to price coming into that area if a breakdown of the support level of this channel at the $80.40 level happens here. So if a breakdown of the structure happens, then we shall be looking forward to buying opportunity to take advantage of that bullish momentum to the upside here. So that is one scenario we shall be looking forward to at this point. Now, the other possible situation that we might be looking forward to here is if price breaks out of the $81 level, that is, takes out all the sell position at the resistance level here, takes out all the sell position here, then I want to be seeing this as a bullish signal. And if this happens, remember, we are not getting too excited, as we need to wait for price action to give us a retest of structure, or probably buying pressure right above the $81 level or around that area on our lower time frame, so that we can join that trend continuation to the upside on the US oil. So these are the perspective I will be looking forward to during the New York session today. Now, in addition to what I explained so far, that is the selling opportunity here, if at any point in time we witness a breakdown of the $80.40 level, if a retest of structure happens which finally leads to the breakdown of the $79.50 area, well, this might likely be a retracement phase of this impulse leg that we have here. So we have this impulse leg here. And if we bring out our Fibonacci retracement tool, running it through that impulse leg here, we should be aiming at somewhere around the 50 and the 78.6, which will be falling around the $77.50 level and the $75 area. So let's label this area for the sake of clarity. Hold on a second. So let me do this so that we can have a visual understanding of what our expectations are if a breakdown of the $79.50 level happens here. So if a breakdown of that structure happens, that is, price breaks down the $80.40 level, retest of structure, leading to a further breakdown of the $79.50 area, well, at this point, I will be thinking of selling at the site of selling pressure on our lower time frame, with a take profit target sitting somewhere around here, where I will be anticipating another wave of bullish momentum to happen. So let's see how this is going to play out during the New York session today. So like I said, we are looking forward to two scenarios here. One, remember you have moved your stop loss to lock in some profit here. So we are looking for either a breakout of the $81 level to give us a bullish signal to join a trend continuation to the upside. And if a breakdown of the $80.40 level happens in such a way that price leads to a further breakdown of this bearish trend line here, sorry, this bullish trend line, which also lines up with a $79.50 level, that is something like this. Hold on a second. Let me give you a visual representation of what I'm talking about here. So if we have something like that, then we should be looking at our take profit target somewhere around this area before another wave of bullish momentum will be happening here. All right, so that is that on the US oil. If you have any questions regarding what I've just explained so far, or you need further clarification at any particular juncture with the structure, feel free to drop in your inquiries in the comment section. So I'll be taking the next 10 to 15 seconds to read through the charts and see if there are any questions before we move on to the next pair. All right, so all right, okay. Okay, in the absence of no questions, I guess we just move on to the next pair. So the next option we are going to be looking at today is the US tech. And look at what happened here yesterday. In fact, we saw this momentum here after. Okay, so this is where we are as at yesterday. So we were around this level here yesterday. Okay, we were right above the $11,525 level. And remember how important the 11,500 level was explained yesterday. Remember how I said this level has been a strong buying niche for participants in this market since the second week of the month of November. So yesterday I said something here that we shall be looking forward to buying above the 11,525 level. So we said a breakout retest of that structure should give us a signal of a trend continuation to the upside. Though we joined the rally here, and then price took us out of that structure. And during the New York session yesterday, we saw buying pressure around this area, which also lines up with an area which has been holding bullish momentum since the second week of this month. So we saw the situation here, and the same thing happened here before the live session yesterday, and we saw another buying opportunity around this area, which finally led to a breakout of the $11,525 level, leading to price going to as far as the $12,000 area. So we had this huge move yesterday following the release from the Fed chairman yesterday. And for those who took advantage of this opportunity, kudos to you for being on standby. I personally left around this area because I set my take profit target around the $11,700 area, which fetched about 190 pips thereabout. But for those who took advantage of this opportunity right to the upside here, well, kudos to you for being on standby to take advantage of that move. Now, with the current situation we have here, what is going to be our plans as we head into the New York session today? Well, the first thing I will be saying here is that we want to be scaling up to the daily time frame, and let's have an holistic view of what's really happening in this market following this impulsive move that happened yesterday. So if we scale up to the daily time frame, what is the first thing which we will be observing here? Well, on the daily time frame, we had the structure figured out here. As we can see, price has consistently been trading bearish since the beginning of the year, and as a result of this, we were able to connect the series of lower highs here to give us that resultant bearish trend line that you can see on your screen. However, in the month of June stroke July here, something interesting happened as we saw that all attempt by the sellers to break down the $11,000 level was met with strong resistance from the buyers, hereby pushing price to the upside one more time. We saw the same thing happen here in the month of September stroke the early days of the month of October, as buying pressure here again would push price to the upside. But unfortunately for the buyers, this area wasn't strong enough for buying opportunities as we started seeing selling pressure right around the $11,700 level to incite further bearish momentum on this chart. And as you can see here, the selling pressure shifted the demand zone further to the downside. So we had a new demand zone figured out here at around the $10,500 level. And if you look at what we have here, considering how important the $11,700 level is here. So the second week of the month of November, we saw this engulfing candle, which took price break out of the $11,700 level. And then as soon as price broke out of the $11,700 area, we started witnessing a consolidation phase right within the 11,900 and the 11,500 area to emphasize the indecision in this market. Now look at what happened here yesterday. Price respected the resistance level here. So as at the beginning of the week, we were thinking that we might be having a reversal pattern in the form of a double top structure that might lead to the breakdown of that demand zone to incite a selling opportunity back into our golden zone area before that bullish momentum happened. But this was not the case, as we saw what happened yesterday after the Fed chairman's speech. We saw this engulfing candle that took price right out of that structure, leading to a further breakout of the $11,900 area to give us a signal that buyers have come to stay at this point in the market. Now, with the breakout of the 11,900 level, now what is going to be our plans for the New York session today? Well, there are a couple of scenarios that we shall be looking forward to here. Now, the first one is this. Following this impulsive move to the upside, we might be seeing a situation where price might come back to do a retest of the $11,900 level, which was broken yesterday, probably followed with buying pressure on our lower time frame to incite another wave of bullish momentum. So that is one scenario that we might likely be looking forward to here, or price come back again to retest the $11,700 level. Remember how important this level has been in the last couple of months now. So we saw that this level has been a strong selling niche before the final breakout of that structure happened here and here. So we saw the breakout of that structure. And from a technical standpoint, whenever we have a breakout of a structure like this, we expect that one point in time, price might likely come back, do a retest of structure to incite another wave of bullish momentum. So we have two scenarios here. Price might either come into the $11,700 area for another wave of bullish momentum, or we could see a consolidation phase around this area with multiple rejection of the 11,900 to incite another wave of bullish momentum. So what we are going to be doing here is we need to understand what is really going on here. That is around the $12,000 mark, an area which price has tested since yesterday, and in the last couple of hours now, we have been witnessing selling pressure around that $12,000 mark area. So we want to understand what is really going on around here in order to make a decision for today. So let's scale back down to the 1 hour time frame. Let's see what is really going on around that level. So now we are right back at the 1 hour time frame, and one thing we will observe here is that since price tested the $12,000 area, so one thing I'll be doing here is to identify that structure so that we can have a better understanding of what is going on here. So I will be labeling this area I think the $12,050 level, to be more precise here. So we have the $12,050 area figured out here. So I'll be placing this at the top right hand side of my screen. So since price tested the $12,050 level, we have been witnessing selling pressure from that area here, as you can see here. And one thing that this structure is transitioning into is looking more like a reversal pattern in the form of a double top structure. And whenever we cite a possible reversal pattern like this, we want to be identifying the neckline of that structure, and we shall be using that as our yardstick for trading activities for today. So we have a neckline sitting at around I think the 12,000, exactly the 12,000 level. So this is what we have here. So we have the $12,000 level here. Let me readjust this. So when we have a neckline like this, what is the next thing we are looking forward to? We are looking forward to a breakdown retest of that neckline area to incite a bearish momentum. And this is exactly what has happened here. So it appears we might be going through a counter trend opportunity during the New York session today. So we have a situation here with a take profit, with a stop loss right above the $12,050 level, like something like this. Then where will our take profit target be? Well, to identify the take profit target area, we will be projecting an area within our golden zone area. So if we bring out our Fibonacci retracement tool, then we run it through the impulse leg that we saw here yesterday, and we should be aiming at somewhere between the 50 and the 78.6% of that previous impulse leg. So we should be having our TP target here. So we have, and this area also will be serving as our buy zone. So this is what I'll be having here right now. So let me do the quick labeling of this structure. So here we are. So we should be having our take profit target between the 11,750 level and the $11,600 area. So we can see a minimum of 240 pips to catch here and a maximum of about 400 pips to catch here if price moves accordingly in our favor. Now, if we look at the structure here where our TP target is, it also lines up with the very important key level we identified on the daily time frame. Remember, the $11,700 area. So let's see how price action is going to play out in the New York session today. So right below the $12,000 area is an area we shall be looking forward to selling opportunities on the US tech. So we look at that TP target sitting around here, and let's see how price action will relate to that structure. So another catch we have here is that if price comes into the $11,900 level, as you can see here, price comes into that level, we want to move our stop loss accordingly, as we want to see how price will be relating to that 11,900. So if we see buying pressure here, we might be seeing another bullish momentum from that area. But if price breaks down the $11,900 level, retest of structure should welcome additional position to our existing trade here on the US tech. So this is what I will be looking forward to as long as price remains above the $12,000 level. Now, if at any point in time a breakout of the $12,050 level happens, that is, price breaks out of the $12,050, taking out all the sell position around this area, then we want to be seeing that move as a bullish signal that might likely turn out to be a trend continuation pattern. Then if possible, we see buying pressure above this level, then we want to be joining the rally to the upside on the US tech. So these are the two scenarios that we shall be looking forward to during the New York session today. So I hope that we be on standby so that we can take advantage of that move when it finally happens. So if you have any questions regarding what I just explained so far, feel free to drop your inquiries in the comment section, and let's see how I can be of help in that regard. Okay, so in the absence of no questions, let's move on to the next pair. Then the next pair we are going to be looking at is the EURUSD. And on the EURUSD yesterday, it was it was the same scenario here. We were taken out of our sell position with small profit here. As we can see, we We were in a sell position since the beginning of the week. We took advantage of the selling opportunity here after citing the false breakout of the structure. Price came back below the 1.04500 level, and since then price have been trading below that structure. In fact, the first position we took here took us over 100 pips before we started seeing this bullish momentum that took us out of our position with small profit on this one. So now going into the New York session today, what is going to be our plans here? Well, the first thing I'll be doing here, I want to delete all this so that we can have a clean chart here, so that we can see things more clearly. And looking at what we have here on the 1 hour time frame, we can see that price has been caught within a consolidation phase that is right within the 1.04500 level, which appears to be the resistant level of this channel. And then we have the support level at around the 1.03150 area. So this is more or less an indecision phase right now, as participants are still anticipating a catalyst that will be driving price movement, and we might likely be seeing something happen during tomorrow's trading session, that is after or prior to the NFP event. So with the current structure here, what are we going to be planning for the New York session today? Now, since price came back into the 1.04500 level, we have been witnessing selling pressure from that area, an area which also has a memory for selling power. So we saw this area here at the beginning of the week. We saw selling pressure around that area, and during the course of last week's trading session, we saw selling pressure at that same level. And right now we are seeing selling pressure around that area. So are we going to be seeing another wave of selling opportunity that might likely take us back into the support level with over 100 pips to catch again? Well, let's quickly run through the daily time frame. Let's have an holistic view of what is really happening in this market, after which we'll come back to the 1 hour time frame to make a decision here. So going to the daily time frame, what do we have on the daily time frame? Now, when we switch back to the daily time frame, the first thing we observe here at the beginning of the week is that price has been on a long-term bearish momentum, and as you can see here, we were able to connect the series of lower highs to give us that resultant bearish trend line that you can see on your screen, and price has uniformly respected that trend line over the years now. In fact, in the last 2 years, price has been respecting that trend line. Now, the most important structure came in here during the month of May, and that is the 1.03750 level. And if you look at how this level has been since the month of May, it has been a major determinant of price action. As you can see here in the month of May, this area was its buying niche for participant. The same thing happened here in the month of June. We saw buying pressure around this area, but the buy pressure there wasn't strong enough to take price further to the upside, as we started seeing sudden pressure again, which finally led to the breakdown of the 1.03750 level in the month of July. And since the breakdown happened, price has continued to trade below that structure, hereby emphasizing the strength of the sellers at this point. Now, when we fast forward into what has been happening here in the last 1 month, we can see that as soon as price came back into the 1.03750 level, we have been witnessing the consolidation phase around that area, hereby further emphasizing how important that area is. So we have been seeing a tussle between the buyers and sellers at this point, as there is an indecision here. Participants are not sure where price might be leading to in the next couple of days, or is it going to be going up, or is it going to be going down? So we want to be waiting for a catalyst that will help us to drive price action. So now what we want to be doing here is to understand what is really going on around this area. Now, at the beginning of the week, I was of the impression that we might be having a reversal pattern here following this impulsive move, that we might be having a situation where price might evolve into a double top structure that might send price back into the key level at the $1 mark area, an area which was broken during the early days of the month of November. And from a technical standpoint, whenever we have a breakout of a structure like this, we expect that one point in time price might likely come back, do a retest of that structure to incite another wave of bullish momentum at this point. But since price came into the 1.03750 level, we have been witnessing a consolidation phase around that area, further emphasizing the indecision in the market, and at the same time the necessity for us to understand what is really going on around here before jumping into any trade. Now, if we look at what has been happening since the mid-month of November, you can see we had this selling pressure here. We saw this candle closing in the form of a shooting star. The same thing happened here on Monday. We saw a shooting star candle here also. And what does this tell us? It tells us there are sellers at this point in the market. So what we noticed here is that there has been selling pressure around the 1.0500 level, a very strong psychological level here. So you can see, let me label this area for the sake of clarity. So we have the 1.0500 level, a very strong psychological level for that instance here. So we can see we've been witnessing selling pressure right below the 1.0500 level. So for us to buy this one, I will suggest that we wait that price breaks out of the 1.0500 level, taking out all the sell position around that area to further signal a possible trend continuation to the upside. But if price continue to trade below the 1.0500 level, then we want to be looking out for selling opportunities that might likely break down that very important key level at the 1.03750. So what I will be advising us to do now is to scale down to the lower time frame. Let's see what is really going on here since the beginning of the week, and then let's use whatever structure or pattern we could identify there to make a decision for the day. So remember, we have the, hold on a second. Remember, we have the hold on here. So we have the 1.0500 level here. So we have the 1.0500 level here. So price is still trading below that level, and we have been witnessing selling pressure around this area. So what I'll be suggesting is that for those who took advantage of this, well, kudos to you. Let's see how this is going to play out. But if you are not yet in this trade, well, I will be advising that you might join at this point, and let's see how far this selling opportunity is going to go here. So, what's happening here? I'm trying to, okay. So we should be having a selling position running here with a stop loss. If you could afford around 50 pips stop loss here, let's do this, and with our take profit target still somewhere around this bullish trend line here, which is about 300 pips thereabout. So let's see how this is going to play out during the New York session today. So let's hold on to a sell position here as long as price continue to trade below the current structure we just identified here. And if price breaks down the 1.03150 level here, that is the support level of that channel, which has been holding price action in the last couple of weeks now, then a retest of structure followed by selling pressure on our lower time frame should be giving us an opportunity to add more position to our existing trade here on the EURUSD. So we continue to look out for selling opportunities here on the EURUSD as we head into the New York session. So the next one we are going to be looking at is the USDCAD, and the same thing happened here on the USDCAD. Price took us out of our position with a small profit here, though we are still profitable on the USDCAD. Remember yesterday we had this buy zone figured out where we said we are looking forward to a retest of that structure to take advantage of that bullish momentum, and sincerely price came back, moved about 80 pips in our direction, and obviously we would have moved our stop loss accordingly to protect our position against any sudden pullback. And following the event yesterday night, we saw this breakdown of that structure taking us out of that position. And remember, on Monday we took advantage of this, which gave us about we had two positions running. We had one here, then we had another one here, which gave us over 300 pips here. So we are still very profitable on the USDCAD. So now that we are heading into the New York session today, what is going to be our plans? Well, let me delete this so that we can have a clean chart here. And we should also remember how important the 1.3 500 level is. Remember how important that level is. So for the sake of clarity, I will be scaling up to the daily time frame so that I can show you what I'm talking about here. All right, so we have the situation here on the daily time frame. Price has been on a long-term bullish momentum, and as a result of this, we were able to connect the series of higher lows here to give us that resultant bullish trend line. However, a very important structure was identified at around the 1.32 level, an area which was holding selling pressure between the month of July and the month of September, before the breakout of that structure here happened later on in the month of September. And from a technical standpoint, whenever we have a breakout of structure like this, we expect that price is likely going to come back, do a retest of structure. And in fact, it took about 2 months for price to come back, do a retest of that neckline area at the 1.32 level. And what we saw here was a simple reversal pattern in the form of a double bottom structure. As you can see here, we saw the second low here. Price was unable to break the previous low, and then we saw a breakout of the neckline of that reversal pattern at the 1.35 level to give us a confirmed reversal pattern. And what we saw here yesterday was an engulfing candle that took price back into the structure. So I'm of the opinion that a bullish momentum is still very possible at this point. So what we are going to be doing here is to look at what is really happening around this area since the beginning of today. Let's see how participants in this market is relating or reacting to the 1.34 level, after which we shall be using the structure there to decipher our next plan line of action. And the fact that price is still above this temporary bullish trend line that we figured out here, we will still continue to look out for buying opportunity on the USDCAD. So let's scale down to the lower time frame, and if we do that, we'll scale down to the 1 hour time frame. And here on the 1 hour time frame, what can we notice here? Now we are looking at a simple setup here also. Price has come back into the structure, and since price tested the 1.340 level, we have been witnessing a consolidation phase around this area, which appears to be transitioning into a reversal pattern. And whenever we have a reversal structure, the next thing we want to be doing is to identify a neckline for that structure, and we shall be using that neckline to serve as our trading guide for today. So okay, let me just extend this out a little further, because we can see that this shares the same structure. So let me do some readjustment here. So we have this area has the neckline. So this is what we have right now. So we can see that price, following this impulsive move to the downside, we have been witnessing selling pressure right below the 1.34 area. So my advice here is that a breakout of that level should be inciting another wave of bullish momentum here. So for the USD card, I will be looking forward to buying above the 1.34350 level with a stop loss below the previous low here. And let's see how this is going to play out. So where will our take profit target be? Well, the previous structure at around the 1.36400 area with over 200 pips to catch here. So let's see how this is going to play out during the New York session. So if price continues to the upside, and in fact, if it breaks out the 1.35 again, a retest of structure followed by buying pressure, we want to be adding more position to our existing trade here on the USD card. However, if price continues to the downside in such a way that it breaks down the structure here, then we might be seeing this as a bearish signal, as a breakdown of that structure followed by a retest of structure should be inciting another wave of bearish momentum on the USD card. So these are the scenarios that we shall be looking forward to on the USD card. So I hope that we'll be on standby so that we can take advantage of these moves when they finally happen. And I always advise that you try to munch my screen or record my screen so that you can use it as a reference point whenever you are making your own individual decision. All right. So the next pair we are going to be looking at today, if you have questions, feel free to drop your inquiries in the comment section. So the next one we are going to be looking at is the USDJPY. So the same structure we have here on the USDJPY, price took us out of our position with some profits yesterday as price finally broke down that bullish trend line that we identified since the beginning of the week. Remember, we identified this temporary bullish trend line as price action has been respecting this bullish trend line since the beginning of the week. So we saw a final breakdown retest of that structure to send price crashing further to the downside. So personally for me, I missed out on this opportunity. In fact, it gave us over 200 pips here, and for those who took advantage of this opportunity, kudos to you for being on standby to have taken this move. So right now we are at a very critical level right now, somewhere around the 1.36 level area here, and since price tested the structure, we have been witnessing this consolidation phase, hereby emphasizing the indecision in this market. So there are two possible scenarios that we shall be looking forward to going into the New York session today. And if we consider the fact that price broke down this bearish trend line from a technical standpoint, whenever we see a breakdown of a structure like this, we expect that price might likely come back, do a retest of structure followed by selling pressure to send price going further to the downside. So this is what I can see here on the 1 hour time frame. But in order to have a better perspective into what is really going on here, we'll need to scale up to the daily time frame. Let's have a look at what is really happening around this area in order to see things more clearly and be able to catch the move at the right time when it happens. All right, so back on the daily time frame here, well, let me quickly run through our long-term expectation here on the, okay, hold on a second, let me do this. Okay, so from a long-term perspective, we have been monitoring the USDJPY for quite a while now, and we can see here on the daily time frame that price has been on a long-term bullish momentum. In fact, since the beginning of the year, price has continued to find higher lows, higher lows and higher highs. And as a result of this, we had this bearish bullish trend line figured out here. But something interesting happened here in the month of August as we saw this reversal pattern here in the form of a double bottom structure with a neckline sitting at around the 135 Japanese yen level. So we had a neckline sitting around the 135 Japanese yen level, and price finally broke out of that structure. And since then, price is yet to come back to do a retest of that level. And from a technical standpoint, whenever we have a breakout of structure like this, we expect that one point in time, price might likely come back to do a retest of that structure to incite another wave of bullish momentum here. And with the look of things here, and look at what happened here throughout the month of November, we have been witnessing selling pressure here, breaking down the 145 Japanese yen level. Then price came down as far as breaking down the 142.500, caught within a channel here between the 142.500 and the 138 Japanese yen level. Then we saw a final breakdown of the structure during the early hours of today, leading price back into the 135 Japanese yen level. Now, at this point in time, my advice for those, if you had missed out on this opportunity, someone like me, I missed out on that opportunity. Well, for those who are still in that trade, who took that advantage, well, I will be advising you to move your stop loss accordingly, lock in your profit at a desired level, as we might be having a bullish momentum coming in at this point. So at this point in time, we are at a very critical level here as price is heading closer back into the neckline that was broken here in the month of August. So let's see how price is going to relate to the structure. We never can tell how long this is going to take. It could be during the NFP tomorrow, or it could be prior to the NFP. So one thing I want to be saying here are two things. Now, the first situation here is on my lower time frame, I want to be seeing buying pressure around this area for me to join a possible bullish momentum, which might probably come back to do a retest of that bullish trend line to incite another wave of bearish momentum. Or we could have a breakout of that structure, retest to incite another wave of bullish momentum here. So that is one scenario that I will be expecting if I start seeing reversal patterns right above the 135 Japanese yen level. However, if price breaks down the 135 Japanese yen level, then I want to be seeing it as a bearish signal, a retest of structure followed by selling pressure on our lower time frame might likely incite another wave of bearish momentum at this point. So what I'll simply be saying here is that we want to remain patient here. We don't want to jump the gun. We want to remain patient and wait out for structure to evolve into a tradable setup. So like I said, we are going to be patient here. We are going to be looking out for how price is going to be relating to that 135 Japanese yen area during the New York session today. And if you are lucky enough, we are able to identify a reversal pattern there, then we might want to be taking advantage of a bullish momentum with a take profit target sitting around the 142.500 area, which also lines up with this bullish trend line here. And we continue to guide our position judiciously. If price gets into the 138 Japanese yen area, that is when price moves to the upside here. Hold on a second. If price moves to the upside here, and then we start seeing we want to lock in some profit as price tests the 138, and then if a breakout of the 138 happens followed by buying pressure on our lower time frame, we might want to add more position to our existing trade. So this is what I'm going to be looking forward to. So we are going to remain patient here. And for those who are already in the sell position that started yesterday, well, congratulations, guys. Move your stop loss accordingly, lock in your profit here, and let's see how price will be relating to this current structure. So now back to our daily time frame here. Sorry, to the 1 hour time frame. Like I said earlier, we want to remain patient. We want to look out for, we already seen wicks here that's suggesting that there is buying pressure around this area. So we are around the 136. So for the sake of clarity, let's identify that structure. So we are around the 136 level. So we have the 136 level here. Let's label it. So 136 level. So let's continue to see how price is going to relate to that structure. And if at any point in time we identify a double bottom structure, we want to join the rally to the upside, or it could be a head and shoulder pattern, something like this, then we want to be joining the rally to the upside, or it could be a falling wedge. Whatever it is, look out for your reversal pattern around that area to join that bullish momentum when it happens. All right, so that is that on the USDJPY. If you have any questions, feel free to drop your inquiries in the comment section. So I will be moving on to the last pair that we shall be treating for today. Okay, I can see some comments here from, okay, Steamroller, good morning. I have had internet issues, missed out on the USOil. I have a buy trade with a stop loss at 300%. Oh, so sorry about that. Okay, so are you still in the buy trade? Are you okay, give me some more information about that, Steamroller. I will see your recap, but if you could possibly tell me if you think it's going up and where a target may be. If you can't, I'll wait for the recap. Okay, so let's do that at a recap, okay, Steamroller? We'll do that at a recap. Okay. 300 profits, stop loss. All right. Oh, you're welcome to 2018. All right. All right. So let's quickly run through the XAUUSD, after which we do a quick recap of what we talked about today, and we're going to be calling it a day afterwards. So the next pair we are going to be looking at is the XAUUSD, and the XAUUSD2 yesterday was a profitable trade for us on the XAUUSD, though we had the selling opportunity here yesterday. And one thing I stated here yesterday was that if price breaks down the structure, retest of the structure, we want to be joining the selling opportunity right below the 1,753. We want to be adding more position to our existing trade. Remember, we took advantage of the selling opportunity right below the 1,760, respecting that neckline one more time. Price broke down this trend line, did a retest of structure, and price moved to the downside. And in fact, it moved about how many pips? Over 990 pips. Okay, before that event yesterday took us out of that structure. And if you remember vividly what I said here yesterday, that if price breaks out of the 1,760, we want to be joining that bullish momentum to the upside. Well, personally for me, I actually missed out on this trade, but lucky enough for me, I set a buy stop on this one right above the 760. I forgot that I set a buy stop, and price just, when I opened my portfolio, I just saw that I was profitable in that buy position after being taken out of that sell position here. And for those who took advantage of that opportunity, well, kudos to you, as price moved about how many pips? Over 2,000 pips in our favor before we started seeing the selling pressure here. And remember, I told you yesterday that we should be placing our take profit target at around the $1,786 level, but it appears price is not getting that far at this point. So I will be advising us to move our stop loss here to somewhere around the 1,775 level, somewhere around here. As we can see, we have a structure around that area. So now that we are heading into the New York session today, what is going to be our plans for the XAUUSD? Now, with the current situation we have here, look at what we have here. We have this bullish trend line figured out since the beginning of this week. And one thing I'll be doing now is to extend that bullish trend line a little further to the upside, as this is going to be our yardstick for trading activity. It's going to be one of the yardsticks we are going to be using for trading activity for today. Now, in addition to that bullish trend line, we have been witnessing selling pressure right around the 1,780 and the $1,782 level here. And so what I'll be doing here is to identify that structure. And what we'll be doing to identify that structure is to use our line chart. When we do that, we should be having something like this. So we have somewhere around the 1,779. Yeah, 1,779. So we have 1,779 here. And we have been witnessing selling pressure right below that level. So my advice here is joining below this level is a very good opportunity to join that decline. So if you're not in this trade, anywhere below this level is most appropriate to be joining the XAUUSD at this point. So where will our take profit target be? Well, in the meantime, placing the take profit target around the 1,753 level seems most appropriate here, but there is a catch here. As soon as price moves in our direction and continue to move to the downside here, and it gets into this bullish trend line, what we want to be doing is to move our stop loss accordingly, lock in some profits, as we never can tell how price is going to relate to the structure here. So if price gets to that level and we start seeing buying pressure around that area, probably evolving into a reversal pattern, then we might want to be joining the second wave of that bullish momentum. However, if price breaks down that structure, that is, breaks down the bullish trend line, retest to structure followed by selling pressure on our lower time frame, then we want to be adding another position to our existing trade here on the XAUUSD. So for this one now, this hour I will be trading this. I'm looking out for selling opportunities right below the 1,779 level, and then we continue to ride on with the trade, moving our stop loss accordingly as price moves in our favor. And like I said, if it gets into the bullish trend line, move your stop loss, lock in some profit, and watch out for either a trend continuation to the upside or a breakdown of that trend line to add more position to our existing trade. However, if price did not go that far to the downside, instead it climbed up, then a breakout of the 1,786 level should give us a bullish signal, after which a retest of structure with buying pressure on our lower time frame should be giving us an opportunity to join that trend continuation to the upside. So these are my scenarios here on the XAUUSD. I hope I made myself clear. And if you have questions, feel free to drop your inquiries in the comment section. I will run through those section. I'll run through the comment section while I do the recap. So before I close for today, let's quickly do a recap of what our expectations are for today. And the first thing we looked at today was the USOil here. And sorry, excuse me. So on the USOil here, we have the situation running. Remember, we took advantage of this buy opportunity here on Wednesday. right above the $78.50 level, and we added position to the $79.50 level at the breakout retest of that structure, and since then price has been moving to the upside around that area. And one thing I stated here at the beginning of the session is that we want to be moving our stop loss to somewhere around the $80 area, lock in some profit there, and let's see how price action plays out. Now, going into the New York session today, there is something that we observed here in the last 24 hours. Price has been caught within a consolidation phase right within the $81 level and the $80.40 level area, hereby emphasizing the indecision in this market. And when we have an indecision in this market, when we have an indecision structure like this, the next thing we want to be doing is to remain patient, lock in our profit if we are still in the trade, and let's wait out for a signal that will be giving us an opportunity to either join a trend continuation to the upside or probably give us a signal that price might be heading to the downside. Now, if we look at the structure closely, that is this channel here, you can see it is characterized by selling pressure right above the $81 level. As you can see the nature of these wicks here, you can see there are sharp rejections here, giving us a clue that sellers are very strong at this point in the market. So one thing I'll be saying here, move your stop loss accordingly, and if sellers drop price below the $80.40 level, then we want to be seeing this as a signal that price might likely be going to the downside. And if it further breaks down this bullish trend line here, which also lines up with the $79.50 area, is a further sign that we might be going through a retracement phase. And if that happens, I have identified a take profit target for that selling opportunity right within the $77.50 level and the $75.50 area here. So this might likely be a retracement of that impulsive move that started at the beginning of this week. So we might be seeing a retracement wave back to this level if price breaks down the channel, breaks down the $79.50 level. So this area will be an area we shall be looking forward for buying opportunity that might incite the second wave of the bullish momentum that started this week. So that is the scenario we are looking forward to. Then another thing I stated here is that considering the channel we've identified here, that is this level, seeing selling pressure around the $81 level here. Hold on a second. So we have been witnessing selling pressure here in the last 24 hours. So if price breaks out of that structure with an engulfing candle and on our lower time frame, we start seeing buying pressure around this area, then we want to add more position to our existing buy trade on the US oil. So these are the two scenarios that I will be expecting here on the US oil. Then we went on to talk about the US tech here, and price has been moving in our favor. I hope you are in this trade already. So if you're in this trade, move your stop loss accordingly, move to break even at this point around the $12,000 area is most appropriate to move your stop loss. And what I said here is that following this impulsive move, that is those who took advantage of this move right from the $11,500 level, might be doing some profit taking activity here, which will be reflected on the charts in the form of a retracement. And as you can see here, we have a double top structure. We have the breakdown of the neckline of the double top structure in the form of the breakdown of the $12,000 mark, so retest of level, and we have a take profit target right within the $11,770 level and the $11,600 area. And one thing I also emphasize here is that the buy zone here shares a confluence with the 11,700. Remember on our daily time frame how important the $11,700 level is. So we might be looking forward to see how price will be relating to the structure. If it goes that far, then we want to be looking out for buying opportunity around this area to join the second wave of that bullish momentum. So for those who are taking advantage of this move right below the $12,000 mark, move your stop loss to break even at this point, and let's see how far we can ride this bearish momentum too. Now, another thing I stated here is if price does not go that far to the downside and it takes us out of our position in such a way that price climbs up the $12,050 level, a retest of that structure should be giving us an opportunity to join the trend continuation to the upside. So these are the two scenarios we are looking forward to on the US tech for today. Then we went on to talk about the EURUSD, and on the EURUSD, I told you that let us continue to look out for selling opportunities especially right below the 1.04500 level. So if price continue to trade below that level, we want to be comfortable in our sell position here. So these are my views here on the EURUSD, and the reason why that is simply if we look into the past here, we can see how the 1.04500 level has been holding selling pressure in the last 2 weeks here, 2 or 3 weeks now. So we saw selling pressure here, and we saw another selling pressure here in the last couple of hours here. So let's hold on to our selling pressure here, and I look forward to a possible breakdown of the 1.03150, and if that happens, a retest of structure should be giving me an opportunity to add more position to my existing trade. So please don't forget that we are still caught within a channel here between the 1.03150 and between this 1.04500 and the 1.0500 level. And if a breakout of the 1.0500 level happens, then a bullish momentum cannot be ignored here on the EURUSD. So these are my scenarios here on the EURUSD. So I hope you'll be on standby to take advantage of this move when it finally happens. Then we went on to talk about the USDCAD here, and to make our job easier for the USDCAD, remember we are profitable on this card, on this pair. We took over 300 pips on Monday and Tuesday with 2 positions running before we witnessed this bearish momentum that took price out of that structure, the current structure we took advantage of earlier on yesterday. And price finally breaks down the 1.35 level, that very important key level we identified on the daily time frame. So to make our job easier during the New York session today, I have identified a structure at around the 1.34350 level, and this structure is serving as the neckline of a possible or a potential reversal pattern around here. So like I said, a breakout retest of the structure should be giving us an opportunity to join the rally to the upside. And if price breaks out of the 1.35 level one more time again, we want to be adding more position to our existing trade. However, if price continues to trade to the downside here, breaking down the 1.33800 level, a retest of structure should incite another wave of bearish momentum. So these are the scenarios we shall be looking forward to on the USDCAD for today. So now the next pair we are going to be looking at is the USDJPY, and what we said on the USDJPY, I told you how important the level we are in right now is. That is the 136, 135 Japanese yen level. And when I showed you something on the daily time frame where I said the last time price was around this level was in the month of August here, where we witnessed the breakout of that neckline of that reversal pattern here in the month of August. And from a technical standpoint, whenever we have a breakout of a structure like this, we expect that price might likely come back, do a retest of the structure to incite another wave of bullish momentum. Now, with the situation of things here, I told you I missed out on this opportunity, and for those who were able to be part of this sell position here, congrats guys. Move your stop loss accordingly as price heads towards the 135 level, a level which was broken out of in the month of August. So I want to see how price is going to be relating to the structure in the next couple of days, on the next couple of hours. So what I said here is that we want to remain patient here, and we shall be looking forward to probably a reversal pattern around this area to join a possible trend continuation to the upside. So this is a scenario I will be waiting for on the USDJPY. So let's see how this plays out during the New York session today. So on the USDJPY, let's remain patient. And for those who took advantage of the sell opportunity that started yesterday, well, move your stop loss to a desired profit target, so that we don't get caught up in any sudden pullback that might likely happen from this area. Then we went on to close the day with the XAUUSD, and on the XAUUSD, we started noticing selling pressure below the 1,786 level. And because of the selling pressure right below that level, I have identified a structure at around the 1,779, and I said anywhere below the structure should be a good place for us to sell the XAUUSD to the downside. And there is a catch here. I said as soon as if price continues to trend to the downside and price gets into this bullish trend line that has been holding bullish momentum since the beginning of the week, and we start seeing buying pressure around that area, then we want to be getting ready to join the second wave of the bullish momentum that started yesterday. However, if a breakdown of that structure happens, then a retest of structure followed by selling pressure on our lower time frame should be giving us an opportunity to add more position to our existing trade. Then there is a caveat here for the XAUUSD, and which is relevant to the 1786, and that is if a breakout of the 1786 happens, I want to be seeing this as a bullish signal. Then we should be getting ready to join the trend continuation to the upside. So these are the scenarios that I'll be looking forward to on the XAUUSD for today. So I hope that we be on standby so that we can take advantage of this opportunity when it finally happens. So on this note, I want to be calling it a day. I wish you best of luck during the New York session today. And remember, we don't want to get too excited whenever we sight a breakout of a structure. We want to scale down to our lower time frame, look out for selling pressure or buying pressure to confirm that the breakout is valid before we want to be joining that move to whatever direction it is taking us to. So do have a wonderful day. Best of luck today, and I look forward to seeing us same place, Extra Speed Live Hub, same time, 10 a.m. UTC, 11 a.m. West African time. So let's come here again. Let's gather here to analyze the market and get prepared for the New York session tomorrow. So do have a wonderful evening, everyone. Bye bye.